Good morning, friends. Welcome to Adda 24/7. We are in selection MCQ series for probable questions, and today's topic is the most important one: Tier 1 and Tier 2 capital. Because Tier 1 and Tier 2 capital are the base of Module B of BFM. Risk management completely depends on Tier 1 and Tier 2 capital. So watch the video till the end. Okay, let's start. Tier 1 capital is bank's core capital, which consists of shareholders' equity and retained earnings. It is of the highest quality and can be liquidated quickly. This is the real test of bank solvency. Now what is this? Okay. First let me ask you one question. Suppose if you are planning to start a business or anything. Suppose you want to build a house, forget business. You want to build a house. What will you do first? You'll try to use what? You'll try to use your own money first. Your money. Right? Whatever means any rational person, he or she will try to use your own money first, right? If that money is insufficient, then that person will go for the borrowed money afterwards, right? So logically every person will try to use his own funds, right? So same thing is done by the banks. What is it? Not only banks, any company. Why only banks? It's other companies also. So tier 1 and tier 2 capital means what? It's own money, and second is borrowed money. So tier 1 is bank's core capital. Core capital means what? It is their, what is your core money? What is your core wealth or property? Which is yours, which you can't, nobody can question you, right? So that is core capital, core property. Same thing is applicable to banks and businesses also, which consists of shareholders' equity. Now shareholders' equity means what here? Equities are of two types, right? Two types of shares are there. Number one, preference, right? And second one is common equity. These are the two types of equities, preference and common. So preference equity means what? This is to be paid compulsorily. Whatever I suppose, if I get some, I issue some shares, preference shares, so I have to pay the dividends. That is to be paid compulsorily. Let anything happen, means once my company is in profit, I'll have to pay these dividends over here. But what about common equity? Common equity means it can be decided by me, by my management, whether to pay the dividend or not. Nobody can question me. So that's known as common equity. So this is known as shareholders equity. And retained earnings. Retained earnings means what? The other names of retained earnings is R&S, reserves and surplus. Right? R&S. Reserves and surplus means what? Whatever is my net profit, that net profit, if I keep it as a safety fund, okay, for future use or any of my personal use, so that will be called as reserves and surplus. It is of the highest quality. Highest quality means what? What do you mean by highest quality? Anything, in anything. It means nobody can question you. So that is of the highest quality and can be liquidated quickly. Simple. Means if it's my funds, I can sell it anytime. If I am having my shares, I can sell them anytime. Liquidate it quickly. This is the real test of bank solvency. Then what is tier 2? Tier 2 includes revaluation reserves. Now see this part. This revaluation reserves, now they have been included in tier 1. Okay. So now this will be included in revaluation reserves. In tier 1 they have been added now. Now this is a change. Okay. In many of your books also you see this revaluation reserves as a part of tier 2, but that's not correct. Revaluation reserves is a part of tier 1 now. Okay. So tier 2 includes hybrid capital instruments and subordinate debt. Everything is borrowed over here. Means if I take some loan from the bank, that is a borrowed capital. If I issue the bonds, so that is a borrowed capital. In addition to tier 2, tier 2 capital incorporate general loan reserves and undisclosed reserves. Means what? Loan reserves, right? Loan reserves means those loans, those reserves which have been taken from loan, okay, and undisclosed reserves also. So get these points very clear. Tier 1 is your own money, highest quality, free capital. Tier 2 is paid capital. Okay, revaluation reserve is a part of tier 1 capital now. In fact, it is a part of CET1 now. Okay, 55% discount. Remember, revaluation reserve is always taken at 55% discount. Okay, discount, it is always taken at 55% discount. Remember this by heart. Got it? Clear? Move on. Chalo. Tier 1 capital is intended to measure banks' financial health. Means, here, let me ask you a simple question. Suppose if tomorrow I issue some shares of some company, my own company, let's say any company, by any company, let me ask you the shares of which company? DHFL, right? DHFL, you know DHFL? That DHFL, Diwan Housing Finance Limited, Ghar Jaisa Home Loan, Shahrukh Khan, right? Company collapse, gone, everything bankrupt, everything is gone. Tomorrow DHFL issues another shares now. It issues the shares. Okay, buy my shares. Will you buy it? How many of you will buy? Type yes in the comment section. If DHFL tomorrow sells some shares, that yes, buy my shares. How many of you will buy? Type yes in the comment section. Let me see. Nobody. Okay, nobody. Tomorrow, other case, Reliance. Tomorrow issues some shares. That buy my shares. How many of you will buy? Everyone, if subject to funds availability. But if you have funds, you will definitely buy. Everyone, everybody will buy these. Everyone will buy these new these shares of Reliance. Why? Why is this happening? For DHFL, nobody is buying. Reliance, everyone is buying. Why? Trust. What do you mean by trust? Trust. This trust is the main part. Now, this trust is reflected in the financial health. If your company's brand name performance is very good, your trust will be more of the people. Okay, so measures banks financial health. A bank uses tier 1 capital to absorb losses without ceasing business operations. Means, as we told earlier, tier 1 capital is what? It's my own capital. Tomorrow if it is lost, suppose I have rupees 100 in my pocket. Tomorrow while going on the road, they are lost. Who can question me? They are lost. What can one do? But if tomorrow I have borrowed those 100 rupees from someone and then they are lost, then the person from whom I borrowed will definitely question me. Where is my money? So tier 2 capital is supplementary, lesser reliable than tier 1 capital because it is borrowed, isn't it? Clear, everyone? Before going ahead, download Adda 24/7 app on your mobile. In this app, you will be getting all the premium study material plus live classes, ebooks, tests, everything you will be getting it. Okay, so download it fast. A bank's total capital is calculated as a sum of tier 1 and tier 2. Regulators use capital ratio to determine the rank bank's capital adequacy. Now, what is this capital ratio? This capital ratio means CRAR. Okay, CRAR. What is CRAR? Capital to risk weighted asset ratio. Shall I write this? Capital to risk weighted asset ratio. Okay, capital to risk weighted asset ratio, CRAR. So regulators use CRAR to determine and rank banks' capital adequacy. Tier 3 capital consists of subordinate debt to cover market risk from the trading activities. Now tier 3 is different. What happens is in tier 3 capital, it's a emergency capital. Emergency means what? Whenever any urgent situation comes to me due to market risk. Remember, there are three types of risk. One is credit, market and ops. So credit and ops is not covered under tier 3. Tier 3 covers only market risk. What is market risk? Market risk is not in my hands. Remember, not in my hands. Right? So means what? For example, Russia-Ukraine war. Because of that, the bond prices rising heavily, oil prices rising heavily. Is that in my hand? Is that in the hand of any bank? Is that in the hand of any company? No. So that is known as market risk. Operations means what? My employee is making some error. So that is in my hands. I can check, definitely. Isn't it? I can give the training. Right? Similarly, credit risk means if somebody defaults, I can have definite checks on the while giving the credit. Proper analysis needs to be done. Right? So that's why tier 3 is used only for covering market risk and not for any other thing. Okay? Minimum requirement of CRAR is as under. As per Basel norms, minimum CRAR should be 8%. Remember this. As per Basel, it should be 8%. As per RBI guidelines, it should be 9%. RBI is one step ahead. 1% extra. Banks undertaking insurance business should have minimum CRAR of 10%. Remember these figures by heart because you will be needing them in exams. Banks undertaking insurance business 10%. New private sector banks 10%. Local area and small finance banks 15%. For dividend declaration by the banks 9%. Here during previous 2 years and current year means basically 3 years. For last 3 years, my CRAR should be 9% if my bank has to declare the dividends to the shareholders. Okay? Get it very clear in this. Let me ask you now, if I am a nationalized bank, okay, who's doing business in insurance also, so what is my minimum CRAR? Type fast in the comment section. If I am a nationalized bank, let's say SBI, or let's say PNB, let's say anyone, okay, there are many names, okay. So if I am the nationalized bank and doing insurance business also, so what is my minimum CRAR? Correct? 10%. If I am, let's say, HDFC bank, then what is my minimum CRAR? Type fast in the comment section. HDFC bank. Look at over here only. You'll know the answers over here. New private sector banks 10%, right? So these are the main points. Okay, let's move on. Before going ahead, subscribe to Officers Adda 24/7 YouTube channel. In this channel, you will be getting number one, very important, free YouTube series on all the subjects of JIB and CIB. Free. What do you mean by free YouTube series? Right now, what are you watching? Right now, you're watching the same free YouTube series on which channel? Check the channel. Check the channel. It is Officers Adda 24/7 YouTube channel. So you're watching the free YouTube series. So similar free YouTube series, you get it on various topics of JIB and CIB. Various, all, not various actually. It's all. Okay. So that's why subscribe to it. Click on the bell icon immediately. Okay. First pause this video and do it fast. Okay. Now let's solve the numericals. If daily volatility of a security is 2%, how much will be the monthly volatility? How do you solve this? Daily and monthly. See, your formula is very simple. Monthly volatility equals to daily volatility into square root of 30. Now why 30? Because month is 30. So that's why monthly volatility equals to, now I'll give you a series. Now once you understand it, it is very simple. Monthly equals to daily into square root of 30. Now I'll ask you, yearly equals to daily into what? Square root of, who can give me now? Type fast in the comment section. Yearly equals to daily into square root of, monthly was 30, so yearly will be 365, correct? Okay, next one, weekly. Weekly volatility equals to daily into square root of what? 7. Okay, clear? So monthly volatility equals to daily into square root of 30. So daily volatility is what? 2%. So what is square root of 30? You do the square root of 30, 5.477. So 2 into 5.477. So that is equal to 10.95%. What do you mean by this answer actually? Suppose if I am having a Reliance share which is fluctuating 2% in one day, 2%. Sometimes it is going from 2500 to 2% above and 2% below. If such is a fluctuation, then monthly volatility will be 10.95%. Means from 2500 it will move 10% above or 10% below in a month. So that is meant by monthly volatility. Okay, got it? If per annum volatility is 30% and number of trading days per annum is 250, how much will be the daily volatility? See here, annual is given, days are given, and daily you have been asked. So annual equals to what? What did we write? Daily into square root of 365 we wrote. But here the number of days are given 250. So we'll use 250, not 365. So annual equals to daily into square root of 250. So now use it. Annual I know it. So annual is what? 30. So 30 equals to D into daily, I'll write it. Okay. Daily into square root of 250 is what? 15.81. So daily equals to what? 30 upon 15.81. So it is 1.90%. Okay. Percent. Always remember, we just multiply this by 100. Whatever answer comes, we'll multiply it by 100. So it is 1.90%. So what is the use of this numerical? Suppose if I am having Reliance share or who is fluctuating per year 30%, means from let's say 1000 rupees, it is moving to 1300 on the top side or 700 on the bottom side. So if it is moving in this range in a year, so daily how much will it be moving roughly? So it will be moving roughly 1.90% daily per day. So this is useful to whom? This is useful to those guys who are doing the daily trading. Okay, options, futures and day trading. It is useful to them. Okay. One day VAR of a portfolio with 50,000 with 97% confidence level. In a year, in 1 year of 300 trading days, how many times the loss of the portfolio may exceed 50,000? Now what do you mean by this? One day VAR, see here, one day VAR of 50,000 is 97 with 97% confidence. Now 97% confidence level loss may exceed the given level on 3 out of 100 days. Now what do you mean by 97%? It means that out of 100 days, out of 100, 97 days, okay, my loss is within 50,000. So for 3 days my loss is above 50,000. Okay, so that's what I have to find out. For out of 100 I am having 3 days where my loss is above 50,000. So if it is above 50,000 for 3 days in 100 days, so now what do I want? A year has 300 trading sessions. So in 100 there are 3 days. So in 300 there will be what? 9 days, isn't it? In 100 there are 3 days where my loss is greater than 50,000. Okay. So in 300 it will be what? 300 into 3 this. Okay. So 9. So 9 days. That is the answer. Okay. Got it everyone? I think so similar this only. Now this you can solve it. One day VAR with 50,000 with 90% confidence level. In a year 250 days it's there. So now it's simple. Everyone amongst you might have got it. Without looking at this, just find the answer immediately. 90 days means in 100, 90 days, right? I am having the portfolio within less than 50,000, means risk less than 50,000. So if I am having this 90 days, so 10 days it is greater than 50,000. Okay. So in 100 I am having it for 10 days. So in how many days is asked? 250. So in 250 it will be 250 into 10 upon 100. Okay. Multiply this, you will get this as 25. So 25 is the answer, isn't it? So this is the way these problems are solved. And remember these numericals, all the 4 which I have taken, will definitely come to you in exam. Not all 4. Out of these 2 at least. They'll definitely come to you in exam. Okay. Now let me discuss these batches here. Selection batch. So this selection batch, you definitely join it. In fact, I would suggest there is a revision batch coming up. I'll discuss that also. I'll show you that also. Okay, revision batch coming up. You can join either the selection or the revision batch. Anyone. Okay, you are having many days, so you can join the selection batch. And if you want, you can join the revision batch during the exam days also. Huge discounts are available. Mahapacks are available. What are Mahapacks? 15 plus batches per subject. Plus batches per subject. Remember, okay? Per subject. So that's why very important one. Got it? So use the code Y432. How to use this code Y432? Let me show you. Okay, let's go to Adda 24/7 live. Okay, if you're having the app, I would suggest go on the app. Okay, I always suggest the students to go through the app, download the app first, because that is important. In the app you are getting 1% extra using the coin systems. Okay, let me show you. Let's go to Adda 24/7. Yeah. See this. You are on Adda 24/7 now. On the front page itself, click on JIB and CIB. So the JIB and CIB. Click on CIB 23. CAIIB 23. Okay. Clicked. Now you'll see the details. See the selection batch. This is what I was talking of. Selection batch. Okay. All the details are given. Means what are the study plans, what are the dates, everything is given. Importantly, I'll tell you, recorded videos are available 24/7. 2 interactive classes. You can ask the questions there and then itself and clarify your doubts. Look at the fees. Let me show you the fees part. Okay, 23,999. But let's see the discounts. Click on view offers. Put the code Y432. Click on apply. See this. 23,999 reduces to 5,519. 77% off. Go for it immediately. Also, let me show you the revision batch. Revision batch is coming up now. Okay. Let me show you. Hold on. Yeah. So let's go to again front page CIB 23. Now scroll down. You'll see this revision batch. See this English. Click on this English. Okay. You'll see the details again. All the details. What all subjects are covered. What is the syllabus. Everything is given over here. So view offers. Click on view offers, put the code Y432, Y432, click on apply. See this 77% off, 22,999 reduces to 5,289. Great discounts are going on. Join these batches ASAP. I'll be back tomorrow with another series. Till then, keep studying and do join the batch.